Ever wondered how the top 1% of investors consistently beat the market while most people struggle just to keep up? What if I told you that there's a secret sauce, a blend of strategies, insights, and practices that allows hedge fund managers to outperform 99% of other investors? Imagine having access to the same tools and knowledge that the most successful hedge fund managers use to generate extraordinary returns year after year. The truth is, hedge fund managers operate in a world of high stakes, big risks, and massive rewards. They don't just dabble in the stock market, they dominate it. But what exactly sets them apart? Is it their access to exclusive information, their analytical skills, or something else entirely? In this video, we're going to uncover the strategies that allow hedge fund managers to beat the vast majority of investors, and more importantly, how you can apply some of these techniques to your own investing journey. That's great, but why should you listen to this? You might be thinking, sure, hedge fund managers have resources and connections that I don't. How can I possibly compete? While it's true that hedge fund managers have certain advantages, many of the principles and strategies they use are accessible to regular investors, if you know where to look. I've spent years studying the investment strategies of some of the most successful hedge fund managers in the world. From Ray Dalio's principles to George Soros's bold bets, I've analyzed what makes these investors tick and how they consistently outperform the market. This isn't just about regurgitating financial theory, it's about practical insights that you can start using today. Whether you're a seasoned investor or just starting out, understanding these strategies can give you an edge in your own investment journey. So why should you listen? Because what we're about to discuss can change the way you think about investing and help you achieve results that most investors only dream of. Now, what you'll learn about hedge fund strategies. By the end of this video, you'll have a clear understanding of the key strategies that hedge fund managers use to consistently outperform the market. We'll break down complex concepts into actionable steps, exploring everything from risk management to strategic diversification, and from leveraging technology to the psychology of investing. You'll learn how hedge fund managers think, how they make decisions, and how you can apply similar principles to your own portfolio. We'll also tackle some of the myths and misconceptions about hedge funds, like the idea that you need millions of dollars or insider information to succeed. The reality is, while hedge funds do have certain advantages, the core strategies they use can be adapted by anyone with the right mindset and tools. So if you're ready to take your investing to the next level, keep watching. One of the most significant advantages hedge fund managers have is access to information and tools that most retail investors don't. This includes not just financial data, but also advanced analytics, proprietary algorithms, and sometimes direct access to company management. But while this might seem like an insurmountable advantage, the gap is closing thanks to technology. Today, individual investors have more access to data and tools than ever before. Platforms like Bloomberg, FactSet, and even some high-end retail brokerage platforms offer advanced analytics, market data, and real-time news that can level the playing field. Additionally, AI-driven investment tools and robo-advisors can help you analyze data and make more informed decisions. So how do hedge fund managers use this information? They don't just react to news, they anticipate it. They use quantitative models to identify trends before they become apparent to the broader market. They employ machine learning algorithms to process vast amounts of data, uncovering insights that human analysts might miss. By integrating these tools into your investment strategy, you can start to think and act more like a hedge fund manager, making data-driven decisions that give you an edge over other investors. Warren Buffett famously said, "Rule number 1, never lose money. Rule number 2, never forget rule number 1." This principle is at the heart of hedge fund investing. Hedge fund managers are obsessed with risk management. They know that avoiding losses is just as important, if not more so, than making gains. But how do they manage risk so effectively? First, hedge fund managers diversify their portfolios in ways that go beyond traditional asset allocation. They don't just diversify across different asset classes, they also diversify across strategies. For example, a hedge fund might combine long-short equity positions with macroeconomic bets, arbitrage strategies, and derivatives. This approach helps to balance out the risks and reduce the overall volatility of the portfolio. Second, they use leverage strategically. While leverage can amplify returns, it also increases risk. Hedge fund managers are masters of using leverage in a way that maximizes returns while controlling downside risk. They do this by carefully managing their exposure and by using hedging techniques such as options and futures to protect their positions. Finally, hedge fund managers are disciplined about cutting losses. They set strict stop-loss limits and are not afraid to exit a position when it's not working out. This discipline helps them avoid the emotional pitfalls that trap many investors, such as holding on to losing positions in the hope that they will eventually recover. You can apply these risk management techniques to your own portfolio by diversifying your investments, using leverage cautiously, and setting clear rules for when to exit a position. By focusing on not losing money, you'll be in a stronger position to grow your wealth over the long term. When most people think of diversification, they think of spreading their investments across different sectors or asset classes, but hedge fund managers take diversification to another level. They don't just diversify across assets, they diversify across strategies. This means that they are not only investing in different types of assets, but also employing a variety of investment approaches, such as value investing, growth investing, arbitrage, and macroeconomic strategies. For example, a hedge fund might have a core portfolio of long-term value stocks, but it might also take short positions in overvalued companies, invest in emerging market currencies, and use options to hedge against market downturns. This multi-strategy approach allows hedge funds to generate returns in a variety of market conditions and reduces the risk that the entire portfolio will be impacted by a single event. You can apply strategic diversification to your own investing by thinking beyond just stocks and bonds. Consider incorporating alternative investments such as real estate, commodities, or even cryptocurrencies into your portfolio. Additionally, explore different investment strategies such as income investing, growth investing, or options trading. By diversifying not just across assets but also across strategies, you can build a more resilient portfolio that can weather different market conditions. Hedge fund managers know that investing isn't just about numbers, it's also about psychology. Markets are driven by human emotions, such as fear and greed, and understanding these emotions can give you a significant advantage. Hedge fund managers are trained to recognize and manage their own emotional biases, and they use this awareness to make more rational, objective decisions. One of the key psychological principles that hedge fund managers apply is the concept of contrarian investing. This involves going against the crowd, buying when others are selling, and selling when others are buying. Contrarian investing requires a strong understanding of market sentiment and the ability to remain calm and objective in the face of panic or euphoria. Another important psychological principle is the ability to stick to a long-term plan. Hedge fund managers are often patient investors who understand that markets go through cycles. They don't get swayed by short-term volatility or headlines. They focus on the long-term fundamentals and stick to their investment thesis, even when the market seems to be moving against them. You can improve your own investing psychology by practicing mindfulness and self-awareness. Recognize when emotions are driving your decisions and take a step back to assess the situation objectively. Additionally, develop a clear investment plan and stick to it, regardless of short-term market fluctuations. By mastering your emotions and biases, you can make better investment decisions and increase your chances of long-term success. Hedge fund managers are at the forefront of using technology to gain an edge in the market. From algorithmic trading to machine learning, technology plays a crucial role in how hedge funds operate, but you don't need to run a multi-billion-dollar fund to benefit from these tools. Many of them are becoming increasingly accessible to retail investors. For example, algorithmic trading platforms are now available to individual investors, allowing you to automate your trading strategies and execute trades at lightning speed. Machine learning tools can help you analyze market data, identify patterns, and make predictions about future price movements. Even simple tools like stock screeners and technical analysis software can help you make more informed investment decisions. The key to leveraging technology is to use it as a tool to enhance your decision-making, not to replace it. Hedge fund managers use technology to process vast amounts of data and identify opportunities, but they still rely on their experience and intuition to make the final call. By integrating technology into your own investing process, you can make smarter, faster decisions and stay ahead of the competition. Another significant advantage hedge fund managers have is their access to a network of experts, analysts, and industry insiders. This network provides them with a constant flow of information that helps them stay ahead of market trends and make more informed decisions. But even if you don't have access to a hedge fund's resources, you can still build your own network and stay informed. Start by joining investment communities, both online and offline. Participate in forums, attend conferences, and connect with other investors who share your interests. Follow industry experts on social media and subscribe to newsletters and blogs that provide valuable insights and analysis. Additionally, consider building relationships with financial advisors, analysts, and other professionals who can provide you with expert advice and guidance. The more informed you are, the better equipped you'll be to navigate the complexities of the market and make sound investment decisions. Now that you've learned how hedge fund managers beat 99% of investors, the question is, how can you apply these strategies to your own investing? Start by incorporating the principles we've discussed: strategic diversification, risk management, leveraging technology, and mastering the psychology of investing into your portfolio. Remember, you don't need to be a hedge fund manager to achieve extraordinary results. By thinking and acting like one, you can give yourself a significant edge over other investors and increase your chances of long-term success. As you reflect on these strategies, consider sharing your thoughts in the comments below. How do you plan to apply these principles to your own investing? What challenges do you face, and how can this community help you overcome them? Let's build a network of informed, proactive investors who are committed to beating the odds and achieving financial success. If you found this video valuable and want to continue learning how to elevate your investing game, don't forget to hit that subscribe button and turn on notifications. We're on a mission to uncover the secrets of the world's top investors, from hedge fund managers to self-made millionaires, and share their strategies with you. Join us as we explore the world of investing, uncovering the techniques and insights that can help you achieve extraordinary results. Whether you're a beginner or an experienced investor, there's always more to learn. So subscribe, share your insights, and let's take this journey to financial success together. Hedge fund managers may have access to unique resources and information, but the core principles they use to beat the market are available to all of us. By applying these strategies, you can start to see your portfolio grow and outperform the majority of other investors. So take action today, start thinking like a hedge fund manager, and watch as your investments reach new heights.